Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors, with your economic review for the second quarter of 2022. Inflation remains the top economic story of the quarter as already strong levels were pushed even higher. The Consumer Price Index, which tracks the 12-month change in prices, stayed elevated in the second quarter, hitting 9.1% in June, a level not seen since November 1981. The primary culprit for higher inflation was a sharp increase in energy prices in recent months, due in part to the Russian invasion of Ukraine. Energy prices were up over 41% in the past 12 months. Food prices were also a big contributor, up 10.4% from last year, and also partially due to the invasion. Housing, which is a big driver of inflation last year, has now cooled under the weight of higher mortgage rates and was only up 4.3% over the past year. The Federal Reserve finally got serious about reining in inflation in the second quarter. Two increases of the Fed funds rate, which it charges to banks to borrow from it. After the Fed's modest 0.25% increase in March, it raised the Fed funds rate by 0.5% in May and then by 0.75% in June. The June increase was the Fed's biggest since 1994. All indications are that the Fed will continue to raise rates aggressively until it sees real signs that the inflation is under control. While June figures are not in yet, consumer spending during the quarter indicated that consumers are getting weighed down by inflation and rising interest rates. Growth in consumer spending in April was a reasonable 0.9%, but it was only 0.2% in May. It seems that consumers are getting cautious about what comes next for the economy. Given the continued high levels of inflation and the Fed's aggressive rate increases, what comes next for the economy is on the minds of many folks these days. Will we be seeing a replay of the Fed-induced recession of the early 1980s? At the moment, that seems unlikely. One of the primary reasons is the strength of the jobs market. The unemployment rate in June remained at a low 3.6%, with many employers still desperate to add additional help. The June jobs report estimated that there are still over 11.2 million job openings, which works out to almost 2 job openings for every person looking for a job. The current job situation is just the opposite of what you see in a recession, where more workers are looking for work than there are jobs available. So we seem to be a long way from a typical recession and more likely in store for a low or slightly negative economic growth until inflation is brought under control. So that's your economic review for the second quarter of 2022. Remember that if you have any questions or concerns about your economic situation, you can always reach out to your Boulay financial advisor. Thank you, and until next quarter, do good and stay well.